So how did I know that Tesla's price would drop 12.5% between July the 31st and August the 14th? And how did I know to alert my members, the members of my tribe, that this was going to happen? This is the thumbnail of the members only video that I put out on July 31st. And this morning, it reached the price I said it would, which was $235.35. It actually went a little below that and then came up. How did I know that? I understand the technicals and I understand the algorithms that Wall Street uses to push prices up and down so that they can enhance their profits. This is the game you're playing. You need to understand who you're playing against and what the rules are and what the keys are that you can anticipate the future price of a stock so that you can buy in to those stocks that are naturally going to seek new heights. That's what this video is about. That's what I want to share with you. I want to take you to my trading views charts and I want to show you how I knew that the price of Tesla was going to go down to $235.35. Didn't know it would happen this morning, but I knew it was going to happen.
Best of Us Investors presents Kerry Griegmeyer.
So how did I know where to put in my buy order on Tesla back on, July the 31st at $235.35? Well, Wes taught me how to do this. Wes is a member of our tribe. He used to do some videos, you might remember, where he went into depth on charting, so he taught me this. What you're looking at here is the Tesla chart from TradingViews, and you're going to see the green, these are gaps where the stock gapped up. The reds are where the stock gapped down. Now, historically, we know that stocks normally come and cover that gap. As you can see, when I looked at this in July, after I did the video on Dojo, Tesla's supercomputer, and I decided I wanted to buy into Tesla, that was up in here. In around the end of July. And so I came here and I said, where is the gap? Well, there's a gap right here that had not been filled. In fact, you can see it was just filled today. So that's where I put my price, at $235.35. Now, the other thing I was taught by Wes was that of Fibonacci retracement. This is another historical technical tactic that Wall Street uses to say that when a stock gets a substantial run up, like Tesla did, starting from April 27th up to a high on July the 23rd, it will retrace itself anywhere from 50% to 75%. So the 50% is $226. That's roughly $9 less than what I just bought it at. So my tactic is, I don't know that it will come back to the 226, but I knew it was going to cover the 235.35. So I bought 50 shares here. If in fact it comes down to the 226, I'll buy another 50 shares. The other thing I know is it will cover this gap. This was the gap down that happened on Wednesday, July the 19th, and the stock will come back up and retrace and cover that gap, which will give me a nice gain, and then probably seek new highs. So that's how I knew where to buy Tesla stock. So then I thought, well, let's look at some other stocks and see if this holds true or if this is just an anomaly for Tesla. So this is Apple. Let's look at it because it's had something of a drop, as you can see. Here it gapped down on, it looks like around August the 7th, and dropped from, it looks like somewhere around 191 to 187, and then has come down. And as you can see, it's filling this gap. And the price at that gap, it appears to be, is 175.77. currently selling at 179. So is it reasonable to believe that Apple will fill that gap? Yeah, I believe it is. If I look even further, I can see there's another gap here at 167, and the Fibonacci is at 161. Will it come to those levels? I don't know. It is. I think it's pretty certain it's going to fill this one at 175, 176. So we want to be aware of that if we're looking to buy into Apple. I want you also to look at this blue line where the gap is. Look how it also matches up with a high back on August the 17th of 2022. That's a support level. Look right here. There's, again, the support level dating all the way back to February 9th, 2022. So this is how the data centers that are accessed by Wall Street look at stocks. This is how you have to look at stocks. Let's look at another one that I want to buy into as a result of, I believe they're going to deliver some of the best technology as a result of artificial intelligence and artificial or machine learning, and that's Adobe. Let's take a look at Adobe. Okay, here's Adobe. As you can see, it's had a phenomenal run-up, but it's also given us a gap. Here's the gap down here, and it appears its price is at about $454. It's currently trading at 520. So it's got a ways to come down. If I then also look at the Fibonacci tells me it's lined up right with the gap at 441. So that gives me some pretty good strength to say I can put in an order. I need to be patient. Something's going to happen that's going to give me an opportunity to buy Adobe, not at 520, but instead somewhere around $441. And that's where I'll put my price in. Now, what I'll do is I trade with E-Trade. I'll just go in and put a 60-day order on Adobe for $440.75 and basically forget about it and just come and watch it. Now, what I want to do is put this kind of data on our website. You probably know we just at the 1st of July initiated the Best of Us Investors website, upgrading it such that it is adding to our Discord. It's where we share with you the Bus 13 and the Bus 12 portfolio, and we'll share the Bus 14 in the future. But what I also want to do is give you these charts from TradingViews in a live format so that you can go to whatever stock you're interested in, whether it's Amazon, Google, Tesla. I'm also looking to buy into Modine Manufacturing. These are the people who make the super air conditioners to keep the data centers cool. But as you can see, it's had a tremendous run. Our Fibonacci says that it's going to come down to $33.67. Our gap tells us it'll come down to $38.52. It's currently at 45. So again, what I will do is put in an order for roughly half of what I would like to own at $38.65, a 60-day order, and let it run. And then if it hits there, then I'll reassess and possibly put an order in for $33.67. That's how I use TradingViews, and that's how I use technicals to tell me, or where is Wall Street seeing the opportunity to push prices down to enhance their earnings and their growth and take advantage of whatever might happen. Maybe Jerome Powell will one day come in and say, I'm raising the interest rates again 75 basis points. That will create a panic, and that panic will take a good stock like Modine and have for no reason have it come down maybe as low as $33.67 and give me the opportunity to buy back in. Because what we know is stocks will go up, then they will come down, and then they will go up again, and then they will come down again. What we need to know is how far are they going to come down, and where are the buying opportunities. We can use technicals, not fundamentals, but technicals to give us a indication where those prices are. This is what I want to share with you on my website. Okay, that's how I'm helping myself make more money in the stock market. I'm a retired financial advisor. I've been in this the majority of my adult life, and I recognize that I'm playing a group of professionals that I should have no expectations whatsoever of playing with them. It's like me going and playing against a professional football team with a group of guys that I put together that I think can beat the Kansas City Chiefs. It's not realistic unless I understand who I'm playing against, and I try to put just a few little elements of knowledge and experience to my advantage. I don't want to beat them. I just want to keep up with them, okay? And who is it I want to keep up with? Is it the S&P 500? Is it the index funds? No, for God's sakes, no. That's 11%. I want 33% return, annual return, just like a hedge fund does. I'm watching millions, and I see how they do it. They gain an advantage. They use knowledge. They use experience. They anticipate what is going to happen through the tips that they get. Well, I can't get those kind of tips. But maybe I can. Maybe I can put together a tribe. Maybe I can put together a group of 50,000 people who have different walks in life, who have different experiences, who have different knowledge bases, and maybe I can bring them together and bring my knowledge and my experience in technology and my years in the business, and maybe I can achieve what the hedge funds achieve. And I don't have to then turn around and charge 2% and 20% of the profits. I can do it for $20 a month. If I can get 5,000, 10,000, a million people doing that, we've got the strength of any hedge fund. The only thing that's going to hold us back is you. You making the decision that I want to turn this into a team sport, and I want to get on a team that is working together to achieve a goal. Now, if you want to play the game by yourself, go for it. Go for it. And maybe you'll get lucky every once in a while. But did you know what I just showed you? They do. And they know more. And they have supercomputers. Do you have a supercomputer that can trade for you in a millisecond? No. So why would you try to do this on your own? I don't know. Some people are just obstinate. Okay. Don't mean that offensive. Don't throw your meanness to me in the comments. I'm not trying to be mean. I'm trying to help you. Let's talk more about this tomorrow.